Yes, let's do it. Fantastic, Andre. Hello, man. Hope you're doing great. Fantastic. So we've got 38 participants. We've got Puriza, Amna, Andre, Angelina, Anis, David. Okay, I'll mute this one. And fantastic. Let's do this. Okay, I guess that's it. I guess I can close it now. Amazing. Amazing. So here's a quick glimpse of what we'll cover this session as members are joining. So let's give it a moment. Okay, fine. Korima, nah, right? Hope you're doing great, man. Hello. Okay, so slideshow. It's here. Okay, fantastic. Let's check the chat really quick before we get started. Hello, Mo. Hope you're doing great. I'm doing fantastic, man. This meeting is live streaming. Yes, it is. Hello, Andre, again. We've got Larry. Yes, everyone is okay. Hope everyone is fine. I'm doing great. Well, no, it's Walid. Hello, Walid. We have Darcy. Hello, Darcy. And we have Nkosi. Hello, Nkosi. Hope you're doing great. So here's a quick glimpse of what we'll cover today. We'll go over, first of all, how to draw support and resistance, of course, in our own way, difference between support and resistance and supply and demand, and how to draw trend lines in a correct way, typical, what I call objective trend lines. Of course, I'll be sharing my customized tips and tricks. And then, which is my favorite part, we'll go over Q&A, and we will do quick coffee refill, because this one is like at the end of it. And then we'll go for the 5 golden swings after our break and Q&A session. Last but not least, we will do some live examples. And of course, you can feel free to request any instrument that you would like me to go over live. Okay, so the expected time for this session, as you already saw from the description, it's around 2 hours. Okay, so feel free, relax, and I'll be your host, and I'll take it from there. Okay, so let's get started. It's very low, sounds very low. Okay, so Larry is saying that the volume is very low. So if anyone is experiencing the same problem, please let me know so I can double check if the problem is from my end. Okay, so seems that the problem is from Larry's end. Amazing, amazing, okay, amazing, fantastic. That was fast. like Larry, you've got like 10 answers in like 2 seconds. I've been for 18 hours, and now I need to stay awake for this. Yeah, man, you are amazing. You made me laugh, and you made my day. So this is it. We'll go over first how to draw support and resistance. Let's take it slow, right? So let's take it step by step. I'll be checking the chat like every section. So when I'm done with this, I'll be checking like the chats, okay? Because I can't keep an eye on so that I can focus. So I'll draw support and resistance. First of all, support and resistance, we already know it, are zones on our charts and not lines. Of course, in a bit, we'll open a chart and we will do live examples. Okay, we don't just like talk the talk. Let's just like put it in a practical way. This is first. Second, support and resistance can be dynamic. You already know it, I guess. It can be like trend lines or moving averages. I personally don't like or don't use moving averages. I personally like trend lines, and of course we'll go over it when around like number 3, right? Just like as mentioned previously, the more times support and resistance is tested, the weaker it becomes, right? So the more a support is tested, the weaker it becomes, and the higher the probability would be for it to be broken down, for it to become a resistance. Of course, we'll take an example and we'll understand why. And once the support is broken, of course, you already know it, it becomes a resistance, and vice versa. But in this session, we'll understand why and how. So let's start with our one, which is support and resistance. Just one question for you guys. You guys are seeing this tab here? I don't want to, I don't want you to see it because it's like annoying. Do you see this, this tab here where you see mute, stop video, participants, chat, and so on? Okay, great. Great, no, because I can see it all the time and it's annoying. Okay, so great. I'm glad that you are not seeing it because it's also live streaming on YouTube and it will be recorded. So let's do it. Let's go for support and resistance first. So first of all, support and resistance are zones on our charts and not laser levels. One mistake traders usually make is that they draw like this one resistance, and once it's broken up or down with just one candle, right, they immediately enter a buy. Okay, which is not a healthy thing to, or it's a healthy way to treat support and resistance. You have to treat them as zones instead of charts or of lines, because first of all, the support and resistance can be overshooted or overshooted or undershooted. For example, here, if we zoom in a little bit, we can see that if we drew our support and resistance like this, right, here the price like undershooted. So the price didn't reach our support area, and instead, like the price rejected this area before reaching our support. However, if we treated our support and resistance like a zone, then of course here we know that the price is approaching a support, and we can look for buy setups on lower time frames. And that's a second thing that we don't like buy blindly, even if the price is around a support area, because in this case it's a resistance, because the price can still break the resistance upward, right? So the price is approaching a resistance area. We'll be zooming into lower time frames, and we'll take an example about this in a bit. We'll zoom into lower time frames and look for sell setups, because no matter how strong, as you can see here, no matter how strong a resistance is, and we've got many rejections from it, it can also it can still be broken upward. And if we check our rule number 2, so our rule number 3, the more times support resistance is tested, the weaker it becomes. So as you can see here, the more times, so 1, 2, 3 we are fine, 4 we are fine. So starting from here, and usually starting from the 5th touch, the probability of being broken is much higher than the price would likely expect it. Okay, so the more it's tested, the weaker it becomes. And as you can see here, after four rejections from it, we don't have enough liquidity, we don't have enough sellers to push the price down. Okay, and you will usually you will usually prepare yourself that the price might break a resistance up. In this case, since we already are talking about it, so let's go deeply in it. So usually when the price rejects a resistance area, it will reject it immediately, right? So if we zoom in, we can clearly see it that the price approached this area and we had an immediate rejection from it. Here as well, only one candle reached this resistance and we had an immediate rejection from it also here and here as well. However, as you clearly see here, the price was testing it and testing it many times, and the sellers seems to be not very strong to reject the price, just like previously. So this is what we call a build-up. Okay, so when you see a build-up and the price isn't rejecting this resistance, instead it's like stuck inside a consolidation around a resistance, means that the odds are that the price would break it upward. Of course, we need extra confirmation for it, so we will be waiting for the price to break it upward. In this case, it will become a support, and we'll be looking for boundary test. But for you to prepare yourself that the price now might break this resistance upward and not reject it. Okay, so basically this is it for our rule number 2. Okay, and anyway, we'll talk more about it when we reach rule number 4, right? So first, there are zones on our charts and not laser lines, and as mentioned previously, because price can undershoot it or overshoot it. So now, how we draw our support and resistance? The first, we have two kinds of support and resistance. The first one is a zoomed out one, a long-term one that has been holding back in history, just like this one that you saw right here. So we drew our support and resistance, this one, in particular from here, right? So we had the support and resistance from here, and when price retests it here, we were already looking for sell setups. Okay, so how do we draw it? We simply start And for those who watch my videos on YouTube already know it, you simply draw a random line on your chart and drag and drop it in a way to connect as many swings as possible. And you know what? Let me delete HDL and Boom for now. Okay. So you start by drag and dropping our our random level in this case for us to connect as many swings as possible. So if we go lower, in this case, we can see that we can only connect one swing, which is right here. So we know that it is not a support and resistance. It might be a good level, but it's not a support and resistance. Okay, so it's not valid. We will keep going downward, and here we go. Here we've got a good support and resistance, and again, it's a zone and not a laser line. So we've got what? If you check it, we've got this rejection here, 1, right? We've got our 2 here, our 3, and our 4. The price nearly tested this one. So it's an entire support and resistance like this, but I don't like to draw it as a zone because it looks messy when you zoom in. So for example, let me put it visual on M30. And just to give you a quick example of what I mean, if you go to M30, I don't know if you have enough data. Yes, we have. So I don't like to see like this big distance when I zoom into lower time frames. All right, I don't like to see a gray background. I always like to see I like to see my usual white background. So this is just a small trick that. This is how I keep my charts clean, because many times people ask me, how do you keep your chart that clean? I like to keep it as clean as possible so that when I open the next time, I know exactly what I'm waiting for without like doing the analysis all over again. So I usually don't like treat it as a zone. I don't draw an actual zone. I'll draw like 2 levels and make like an offset like this one. All right. So if you check my charts, you'll always see like zones like this one. So this is actually an entire zone, and it's actually an entire zone. So this is now around resistance. Anyway, we'll check the DXY in a bit. Let me remove this box. It's really annoying, the upper box. Okay, so this is it, I guess. Fantastic. Okay, so this is our first support and resistance, and we can continue. If you scroll down, you can see that we've got one around this area, right? I don't know if you see it, but if you want, I'll just pause for a little bit for you to see it. And we've got many support and resistance already, right? And this is the one that we drew around here. Okay, so this is because we drew it already. So let's keep it. And we still have 1 or 2 support and resistance. So I'll take a sip and try to figure out where is our support and resistance. Of course, by connecting at least, sorry about that, by connecting at least 3 swings, and the swings have to be major and not like minor swings. So feel free. I'll check the chat. Do you think current crypto bull run will last? Okay, we'll talk about crypto hopefully in a bit or in section 4 or 5. And chat, okay, fantastic. No more chats, fantastic. Okay, so for those who already saw it, we've got a very strong one around here. Many rejections from it around 116, around 117. And this one we already drew. This one, it's not as strong as like this one or the lower one, but this one is still a good one. And for those who are wondering or previously asked me in private about HTL, HTL is not from space. It's just show us the swings to connect, right? So we just connect the blue and red dots to draw our support and resistance in an objective manner, right? Because subjectivity is like a big killer, or doubt in general is a big killer when it comes to trading, because if you doubt your strategy or your tools, chances are you will not be consistent, especially you can't really back test it because you see it every time differently, right? So this is the only thing that HTL does. It helps you become objective. And as you can see here, like this one, we connected this swing, and this swing. So all our support and resistance here are connecting at least three dots in this case because we are using HTL to draw our support and resistance objectively. So if we don't have a swing, we don't have a dot, we don't have a swing. Okay, as simple as that. And this one here is connecting at least three. In this case, it's connecting five. Here, it's connecting like four here, one here, and many here. So starting from here only, we can draw the support and resistance, and we can start to look for buy setups around it here, here, and here. Okay, so let's delete everything for now. And of course, you can always change the color of your support and resistance. Let's keep this one in blue. Let's go for green for this one. So this way we'll have green, blue, right? So this is how you make your chart as clean as possible. Okay, and of course, I'll keep it as a level for now, right? To make it cleaner for you for the sake of this example. But of course, you have to treat it like this as a big zone, right? And so let's now go over this one. Once it's broken, it becomes a resistance. We went over this one, and in a bit we'll go over support resistance can be dynamic when we go over trend lines, right? Since we're already going to talk about it. And now we've done this one, and now let's go over support. Once broken, it becomes a resistance. So why, right? So if you zoom in, we've got a very good example here. Let's make it in blue. I always like to make my last swing or my trigger swing in gray for those who already know me. And I don't like the edge, so I don't like to see a sharp edge. So what I do is I make it first of all like light, like this, and second I go here and make its opacity like below 50. So this way you won't see this like sharp edge. Okay. So now, why a support and resistance is broken? And as mentioned before, the more it's tested, the weaker it becomes. Okay. So now it's a resistance. So we have to understand one thing. That's why, as I always say, if you noticed, I always say support and resistance. So I don't like say a support or a resistance. Even if you are talking about one single like support and resistance or resistance, I always say support and resistance, right? So if it's a support and resistance, the more tests we have around it, of course, as long as the price is respecting it, the stronger it becomes. However, if it's like only a resistance, for example, like this, okay? So for example, here we have this resistance, right? Many touches. So the more tested, the more the price retested or rejected, the weaker it becomes as a resistance. But once broken, it becomes a support again. And if you zoom out, we can clearly see that it was acting as a support here many times, then price hit higher, then tested it here, then broken downward. And this one has been holding back in history from like 2017. And since the price is still respecting it, we will keep it on our chart. Okay, unless the price like go trade around it in a random way, right? Which means that the price is no longer respecting it. And of course, for this to happen, for example, it's from daily time frame, so it would take years. Okay, so we don't update our support and resistance often because it's from daily time frame. Okay, so just every couple of years, you will just zoom out again, right, and go back in history to see if the price is still respecting it like currently, just like it was doing before. Okay, so long story short, support and resistance, it gets stronger, but if it's a resistance by itself, it gets weaker, and sooner or later the price would break it to become support, but it would still be the same support and resistance, but it's now acting as support, and again as a resistance, and again and again. Okay, so the question is why, right? So if you zoom in, as mentioned previously, right, the first time, so the more traders will see it, okay, of course, first, let's keep it as from one perspective. So the more traders will see it, the more rejection you will see around it. Okay, so starting from here, for example, more traders are going to see it, and they are looking for setups around it again and again. So starting from here, for example, if trader A, B, C, D saw this rejection starting from here and looked for sell, then trader X, Y, Z saw it here and looked for sell, then later on like all types of traders, because we have many types of traders, right? Everyone draws his point resistance differently. Every single like trader has a different trading plan. Some traders don't use point resistance, they use Fibonacci, they use moving averages. Doesn't really matter. But the more traders will see it starting from here after many touches, like all the traders already looked for sell around it, and no one is left to look for sell around it. This is the first logic. And the second logic is when the price like break it upward, why it becomes a support area, because many traders here would have sold, right? So many traders saw it late and looked for sell setups, or even us, right? Even us, we saw it here. We know that it's acting as a resistance unless it's broken upwards, right? So we're still looking for sell setups, right? We don't sell blindly unless it's broken upwards. So we're still looking for sell, and for example here, many traders sold this one, then price went up and kicked them out. So they had a stop loss here, for example. So now this zone becomes a memory of pain for these traders, right? And for those traders who traded like the breakout and entered a buy, I personally don't trade the breakout, as you already noticed, right? I'll wait for it to break and then look for buy on the retest. But let's say for the types of traders who like entered a buy on breakout, then this zone now becomes what? A memory of gain. Okay, so memory of pain for the sellers and memory of gain for the buyers. And this is exactly why when the price retests this area, the buyers who had a memory of gain for this zone will then look for buy stops again as price is retesting it, while the sellers who had a memory of pain around this area, they can still remember whether it's a gain or pain because it's a memory, right? And they had a bad or good experience. That's why they still remember the zone. So the sellers with a memory of pain, now the price went up on the retest, they will then join the buyers and look for buy setups. Okay, so this is basically the logic behind support and resistance. We are done with this like section, which is the first one. Let's check the chat real quick and take a little sip. Cheers. Okay, so Fahad is asking, kindly also tell us force breakout and force breakdown conditions. Fantastic. Yes, we'll go over it. Ali is asking, I have a question that how do you select the most recent reversal point? Because sometimes it creates confusion to select area under observation. Okay, I'm not really sure what you mean, but I guess I did. So I'll try to answer it. If I didn't answer your question, then just let me know in the chat. This is for the chat, for the Q&A. We've got, yes, okay, so Ali is asking the same question there. Great. It's a good way to keep the questions in one place. Henry is asking, what are these blue and red dots? Are they, yes. So Henry, I guess you just joined. I forgot to delete them. So before I delete them, so this is simply rich TL. No, it's not based. I get this question a lot. so it's a fractal. It's not based on fractal. It's just like a combination of math formulas to identify an objective swing. So for us, this is not like a complete swing yet. This is a complete swing. This is not a complete swing. Why? While, for example, if you add fractals, you will see that we've got like one here. I guess we've got one here, right? And one here. Okay, so it's not based on that. It's simply an objective way to identify our objective swings. And we'll be using these swings to make our rule-based technical analysis, which is we can draw trend lines, supply and resistance, so supply and demand, and so on. Okay, so and as per my trading style, I like to keep it as objective as possible. This is why on my analysis on TradingView and stuff like that, you always see these like dots. Okay, because I always use them to draw my supply and resistance and do the analysis overall. Okay, so let's answer the questions of that it won't disturb by the news events. Very good question, Anga. Can I share chart here? For example, of the support resistance level. I prefer not to share charts because if you share yours, I'll have to let everyone share their charts. So I prefer not to. If you would like, you can send it to me in private. Sorry, after the session. Okay, if you now you'd like me to ask about a specific like instrument, of course, feel free. And if you want about the one that you mean here, and at the end of the session, which is around number 6, we'll go over examples. Okay, but let's for now go over these ones one by one. Okay, so we've got many questions. The first one is Fahad about okay, so Fahad is asked another question here. So let's start with the first one. So for false breakouts, so when you treat your supply resistance as zones and not as a laser level, this trick by itself will like save you from many false breakouts. And how do you know when a supply resistance is broken? So for example here, this one is broken down, right? And sometimes, of course, no matter what tricks you will use, you will always have fake outs because the price would not respect this point resistance every single time, right? That's why we don't buy blindly around it. We always zoom into lower time frames and look for reversal patterns around it because it's not foolproof, it's not bulletproof, right? So the price can still break it down. But if you mean like if the price like break it upward with a one candle and then like trade it lower, this first of all, this zone trick will save you from this because price can dive inside the zone. For some traders, it's broken now, right? While for other traders, it's not broken now yet. It's still acting as a resistance area because, as mentioned previously, different traders draw supply resistance differently. That's why we want the resistance to be broken for every single type of traders. For example, trader A, draw it like this. Trader B, draw it like this. C, D, and F, right? So we want this resistance zone to be broken for all possible traders. That's why we want an aggressive movement outward from it for our resistance to be broken for all traders, right? So this is one. To treat it as a zone. In this case, like if the price is diving inside the zone, you don't consider it as it's broken yet. And two, as mentioned before, wait for an aggressive movement upward. If you watch my previous videos, then for example, for this support to be broken, if price like had one candle close below it, it's not confirmed yet. For it to be confirmed, we need to see at least two full bearish candles, just like this one is very big, just like this one, for example. Right, so two big full candles or a massive big aggressive candle closing below it. Just give me 1 minute. Okay, yes. Okay, fantastic. So let's continue and let's read all everything previously. Here we go. Yes. So the first one I answered Fahad. I'll answer 2 questions more, and then we'll continue with the next section. Yes, fantastic, Salim. And okay, so first breakout, we already answered this. Then we've got question, reversal points. The most recent reversal points. Okay, so we've got Ali. We've got 2 kinds of reversal, and also we'll take an example about it hopefully very soon. The first one is we have to check the zoomed out picture. Okay, so now in this case, these are the only support and resistance zones that we could draw in this particular chart. Okay, we start from daily time frame, then we will be zooming in. Right, we're selling daily on weekly and daily, which are our rejection time frames. Then we zoom in, and then we can identify what we call market structure to know where we are in the market. So we start from the zoomed out, we get a big picture, and then we zoom in to find where we currently are in the market. So we already have our support and resistance, right? But we look at the price action to know where we currently are. If you are overall bullish, overall bearish, or in this particular case, as you clearly see, it's stuck inside this range, right? So we know that from a zoomed out perspective, it's around a support and resistance, right? And it happens that this range now is between the support and resistance, which were identified previously. So identified here, because this upper one is 1, 2, 3, or even 4. So starting from here, it's identified, and the lower one is like 1, 2, 3. So also starting from here. So it happened that the price like traded here between these 2 support and resistance, broke this one upward, broke below this, inside this, what we call floor, if you want to call it, and then it's now stuck inside it. So which would give you a better idea about where you currently are in the market. So we're in a range. It happens to be also around the lower bound and the upper bound of a support and resistance. So this is how you identify the recent or the latest, the latest price action. Okay, so we know that. And of course, in a bit, we'll take an example about if the market is overall bearish, because here it's very easy, right? Inside the range, and we have a support and resistance also. Okay, so this is it. I'll take one more example. Use any tool. Okay, so it's Ishwan, right? Okay, so if I'm saying it wrong, please let me know. Do you use any tool to scan which market to trade? I usually this is my usual watch list. Okay, so usually all the forex pairs. And what I do is every weekend I just scan all the pairs, and I write notes, and I'll also use the color. So if it's warm, if it's still like approaching a support but it's not forming anything yet, I'll make it in green. That I'll keep an eye on it. If it's like around a support and already formed a setup and I'm waiting for a trigger, or I already entered, I make it in red, for example. And if it's, for example, between a support and resistance, so I'm now staying away from this one, so you see it white, or I can make it in orange, right? So it depends on you. How much time do you have? And I personally do it over the weekend, so the market would be closed. The answer would be as objective as possible. I always recommend that you do the analysis over the weekend. I call it the weekly overview, and then on Wednesday I do another one for like quick updates. Okay, and of course you will use alerts and so on. And again, it depends on your trading plan and your strategy. Okay, but mainly, no matter what trading plan you are using, make your homework, spend time on Saturday and Sunday to prepare your charts. And if you would like also like bring a notebook and write down your comments, or if you would like, some traders would like to write comments like this here. For example, waiting for the trigger, and so on. Of course, you make the font like smaller, like this, right? So when you open your chart, you will know that you are waiting for a trigger, and of course, you will make it in red and so on. Okay, so this is basically it. Okay, so now I'll continue. I'll try to answer your questions during the Q&A session. Okay, so now let's continue and go for supply and demand zones. Okay, so what's the difference? Now we know that a support and resistance is when we have many failed attempts to break above or below a certain level or area, right? When you see many failed attempts to break above a certain area, you know that we've got a resistance or a support and vice versa. However, supply and demand is formed from one, here we go, had a one fresh, untouched base. Okay, so one, remember that, one fresh, untouched base. Okay, so we've got an aggressive movement from an area. This is now is a demand if the aggressive movement is upward. Okay, let's take some examples. And yes, sometimes it happens that a supply zone is around a resistance zone, and a support, the demand zone is around a support zone. But it doesn't mean that they are the same thing. Okay, many traders get confused about supply and demand zones, and I've made a video about supply and demand. It's like 20 minutes. You can find it on my YouTube channel. Okay, so basically, let's go over it really quick, because at the end we'll put everything we learned together through a live example. So let's go over it really quick. For those who already know it, it's okay. It will be a quick reminder or just to refresh your memory. So we've got 4 types. So we've got 2 types for a supply, 2 types for a demand. The first one is for a supply zone, is when we have a rally, a base, and then an aggressive movement down. We want the movement to be aggressive. So this is an aggressive movement. This one is not an aggressive movement, right? So you have to see it that we've got an explosive movement down, just like this one, right? You see aggressive candles pushing price downward from a single base or a single point. It can be one candle, it can be multiple candles. Don't like I don't know how to say it, but it's exactly the same thing. Okay, so it can be one candle and it can be a whole base. When you see an aggressive movement downward, then the base or where the movement was started, this is your supply or demand zone. So this is not a demand zone, right? You can see the price is going flat. Okay, and here we don't have a demand zone. Here we had a demand zone, aggressive movement upwards from it. Okay, in this case, it's a drop, base, and then a rally, right? And vice versa for a supply, a rally, base, and then drop. And then we have the drop, base, drop, which is also what? Which is also a supply zone. Or I don't see an example here, or a rally, base, and a rally, which is a demand zone. So a demand zone can be drop, base, rally, or rally, base, rally. It doesn't really matter. So don't just like put a lot of effort about what its name is. It's a supply, right? When you have an aggressive movement downward, as you can clearly see, we've got an aggressive movement downward. This is a supply zone, and this is in our case where the movement was originated from this base. Okay, in this case it's a base, many candles. So this is basically our supply, and as price approaches it, just like we did previously, okay, with supply and resistance, we don't sell blindly. I know some of you or traders in general like to sell immediately, or just when they see, for example, a supply zone, they will just put sell limits at the beginning of the zone and the stop loss above the zone. Yes, if you would like, if this is your style, you can do it. But as per my trading style, I identify the supply and demand zones just like supply and resistance from daily and weekly time frames, and then I zoom into lower time frames to look for sell setups around this supply zone in this particular case, because also supply and demand zones, no matter how strong the aggressive movement is, they are not foolproof. Okay, so it can always be broken upward or downward. For example, here we've got what? We've got a demand zone, right? It's a very strong one, an aggressive movement upward from it. Then, as you can see, the price break it downward, like we don't have a demand zone, right? So this is why we don't buy blindly around a demand zone. And again, as per my trading style, so we zoom into lower time frames and look for buy setups around this demand or supply zone. And sometimes And as we mentioned previously, so this in blue, which is around 1.22, we already had it previously. So we've got many rejections from it. So starting from here, we had the support and resistance, which is now obviously, as price broke it downward, it's acting as a resistance area, right? It happens in this case that we have a supply zone around a resistance zone, right? Which made the zone even stronger, okay? So it happened that we have a supply around resistance, but it doesn't mean that they are exactly the same thing. And we also had here a supply zone, which is around a resistance area. So this area was a very, very strong area to look for sell setups because it's the intersection of a supply and a resistance area. Okay, so this is basically it. Now you know what to look for. We want aggressive movements downward or upward, right? So here we have a demand area, and now here we have a supply area. If the price and here we have what? Here we have a base, a rally base and then rally, right? So here we have also a demand area. Always look or only look for aggressive movements up or down. If the price is going flat, just like here, or like it's going up, we have a swing low and the price is going up a lot, right? Just like here, but it's going flat. It's not like aggressive, just like here, or here. So only look for the strongest ones. And as per my trading style, as mentioned before, I only look for supply and demand zones on daily and weekly time frames, just like support and resistance, and then zoom into lower time frames to look for setups around it. I'll check the chat before we go over the next section. For intraday trader, can we use H4 for support resistance and 15 for setups? Yes, exactly. I'm personally a swing trader. I find myself on the higher time frames, so that's why I start from the daily and weekly to find my rejection, find my support resistance and where in the market, and then zoom into H4, H1, and M30 to identify my trades around these support and resistance. If you are an intraday trader, so yes, you can basically go for H4 for support resistance and rejections, and zoom into M30 and M15 to find setups around the support and resistance. Okay, so this is it. Actually, trying to how to select your area for entry trigger. Yes, fantastic, Ali. We'll take an example about this and the last section. How to scan, I already answered this one. I'm not sure if I missed a question. You said trigger for taking grade. Yes, exactly. I just read your question, and hopefully we will. Hopefully I will answer it last. Sorry, in the last section, can we exchange? Okay. Is any website which tell us depth of market, exchange pending order book? I'm honestly not familiar with this type of tools, so I can't really help you with Dom. Okay, so this is basically it. Let's check the Q&A before we get started. What's your smart money concepts? They are good, and we've got many questions previously, but of course I will answer them all. Okay, so we have Everesto, right? Hope I'm saying it correctly. Cheers. So Everesto asked, what's your view on smart money concepts? They are good, but as per my trading style, I don't really use it, because as mentioned previously, smart money concepts would like to catch. So for example, they identify a supply area from higher time frames, then we zoom in to make the supply area even smaller, like they call it order blocks and so on, and liquidity trap and so on, right? So they want to catch very small trades with a very big reward, right? It's good as long as you know what you are doing and you backtested your strategy and it's proven that you have an edge. So no matter the strategy that you see online or from any other traders, always backtest it. Always only do the thing that makes sense to you. Okay, it's a strategy. It's still an idea. you backtested and you've got like at least 100 or 200, and you have a 50% of a win rate of 50% and above, then you can apply it on your own account. Because no matter what strategy that you learn, no matter what strategy that you learn online, when you start applying it, you might apply it in a different way. Okay, so always backtest it to see if you are seeing it the way that you should see it. Okay, I'll mute my microphone for another minute. Okay, and we'll get back. I'll read the chat meanwhile. So, okay, we are back. When a price is in the middle of the range, but creating a good pattern setup, do you ignore it? Yes. Yes, exactly. You've said it all. If the price is in the middle of the range, I'm not looking for setups, because around here I don't have an edge over the market, right? So our main job is to identify areas when we have an edge, right? So around this area we have more probability, right, that the price would go up than down. Of course, the price can still break it downward for it to become a resistance, but here for now, it's acting as a support area. So we have the odds are in our favor if you are looking for buy setups. And around this area, right, we have more probability that the price would go down than up. It can go up, right? We already said it, but yes, and as mentioned, as our main job is to look for areas where we have an edge. If you don't have an edge in the middle, so we are in the middle of nowhere, the price can go either up or down, right? Unless of course the price is sitting inside a big zone, right? So let me show you an example. Here we go. So let's say we've got a resistance and we've got a support here, right? So it's a big area, not just like the one we just see or so on GBP SHF, and the price is overall bearish, for example, and this trend line is from daily time frame. So the price was going up, rejected our resistance, and now it's trading inside this area, right? And yes, now even if it is in the middle of this range, right, but we know that we have a trend line here that, and now I will go over trend lines in a bit in the next section. So now here around this area, we have an edge that we are overall bearish, right? We have this trend line, which is from daily acting as an horizontal resistance. So yes, here we can look for sell setups, but of course we will not be looking for buy setups because the price is overall bearish now, rejected the resistance and is going down to test the support area. But of course, we will only be looking for sell around this upper trend line around here if the price is like still far away from our support. If, for example, the price is now around here, then of course we will not be looking for sell setups because the price is very close to our support area, right? So long story short, sell here, buy here. If we are bearish and we are away from our support, we'll be looking for sell. If it's around the support, we will stop looking for sell, but we're only looking for buy setups. And of course, vice versa, in case we have we have a rising channel and the price is overall up. Okay, so let's take one more question. and we continue with now we've got like okay, so Andre is asking, Rich, I have a question. Imagine if we take a sell on a resistance area, it goes for 1 hour. So now we're talking about 1 hour. Nice. We move the stop loss to break even, and market comes back and takes out the trade. Would you re-enter if the setup presents or move to another pair? And as you mentioned, Andre, if you know what, let me share my screen, my chart again. So for example, if you are looking for sell around here and you've entered sell, for example, here, and the price like you shorted here, the stop loss is here, and we are targeting 2 hour. Anyway, we'll go over like the resistance to reward ratio and so on, and the live example at the end. But yes, you mean that if price goes to 1 hour and then you move your stop loss to break even, then price kicked you out. Okay, so if we got kicked out on break even, we don't sell immediately. Okay, so which means that the sellers aren't very strong to push the price lower, right? It means that the buyers kicked and pushed the price higher. In this case, if the price forms another sell setup, then yes, if the conditions are met, then yes, we can sell. Okay, if and only if a new setup is formed, we will not just resell or re-enter just because we had a retest. Okay, it kicked us out, then this is a break-even trade. We'll just write it in our trading journal, and if price retests this resistance again and form a valid sell setup, then yes, we can re-enter. Of course, unless it's broken upward, then it will become a support area. Okay, so this is it. Fantastic. Okay, so in the Q&A, Ali is asking, how do you select trigger area for taking entry? Yes, Ali, I will answer your question at the end. Okay, fantastic. Let's continue with our trend lines, and next we'll do refill because this one is going to end. So the trend lines and customized tips and strategies. Okay, so first of all, we've got two types of trend lines, and I've put them in this table. Here we go. So we've got long-term trend lines, and we take an example about it, which are from daily and weekly time frames that we saw just previously with this example. If you are overall bearish, so from daily and weekly time frames, we draw our horizontal support and resistance, and also our non-horizontal support and resistance, which are trend lines. And that we saw previously that support and resistance can be dynamic. So this is exactly it, that which are in this case trend lines, right? And these type of trend lines act as a rejection, okay? And we don't like enter trades upon these trend lines. So our overall bearish would be looking for sell setups around the upper trend line, which is a non-horizontal resistance. We zoom into lower time frames and look for sell setups. Okay, while the second type is our what we call a trigger trend line. So the long-term one, daily, weekly, they are rejection trend lines, while on H4, H1, and 30, there are trigger trend lines, and we'll see an example about this in a bit. For the long-term trend lines, we can draw it by connecting only 2 swings, while for the trigger trend lines, we need to connect at least 3 swings for it to be valid. We have like an example about this one on NZUSD. For those who saw it, I posted this one on TradingView. So we've got this is from daily time frame, right? So we have this swing and this swing, right? So we drew a trend line here that and this trend line is engulfing or like it's showing us the overall direction that it's obviously now bearish, right? So we've got this impulse, and then we've got a correction, and then we've got this impulse, right? So we know that we are in a downtrend, but we want to get an idea about where is the upper bound and the lower bound, okay? So it's not like a laser line. It's also like a zone. And for example, you should draw it like this. Okay, so it's not a laser line, just like support and resistance, but I draw it as a level just to keep the chart clean. Okay, so this is an entire zone. And for example, starting from here, right, we know that this trend line is acting as a non-horizontal resistance, and as price approaches it, we will be looking for sell setups, right? It's just like a horizontal resistance, and we can draw it from only two swings. Okay, so it's just for over direction, acting as a support, non-horizontal support and resistance. While on lower time frames, let me give you an example. I guess we had a trend line here on H1, or we had a, yes, exactly. So this is a fantastic example. And you know what? I guess I posted a picture on TradingView, and I made a video about it on YouTube here, I guess. Yes. Okay, so we are overall bearish. When the price was approaching this trend line, which is from daily time frame, right? Now we know that this is overall bearish. This is our upper bound, and this is our lower bound. We're interested in selling around the upper and buying around the lower, right? Of course, unless in between we have support and resistance, horizontal ones. So as price was approaching this area, we were looking for sell setups. So only two for higher time frames for rejection, while for the trigger, right, we zoomed in, the price was approaching this this one, then we zoomed in and we tried to find a pattern, and any bearish reversal pattern in this case, because we are looking for sell setups. In this case, we need to connect at least 3 swings. You know what? Let me delete these ones. Okay, so we need to find a trend line that connects at least 3 swings. So one, this is an entire swing. If you zoom in, so this is not just like one touch, two touches, right? It's just one touch. So connect swings and not points, and not like wicks. Okay, so this is an entire swing, which is this swing. Okay, and this is an entire swing, which is this swing. So 1, 2, and in this case 3, which is this swing. Okay, and then we have, as mentioned previously, by connecting at least 3 swings. So if price like formed like 1, 2, like 1 and 2, and then broke the trend line downward, it wouldn't be valid, because it's a trigger trend line and it has to connect at least 3 swings. So in this particular case, our entry was 1, 2, and 3 was here when this trend line was, sorry about that, when this trend line was broken downward. And one of our tricks, one of our tricks is, for those who already know me, they already know it, but for those who are new, we don't like sell on the trend line break immediately, because trend lines are not laser lines. Okay, they are like zones and not laser lines. Just like we said previously, they should be treated like this, for example. Okay, so many mistake traders usually make is that they only draw trend lines by connecting only 2 swings, for example 1, 2, right, or 1, 2, 3, for example, and then when it's broken down with this wick or this candle, they will enter sell. Okay, it's not the good approach. The first one is don't connect like wicks, connect swings. So 1 swing. Okay, so this is 1, this is 2, and this is 3. So this is the way that you have to connect like this. And of course, when we don't sell immediately when it's broken down, we don't sell here, right? We wait for the last swing to be broken down or upward. In this case, it's downward because we're looking for sell. So wait for it to be broken, and then we can enter a sell. Then the sellers will prove to us that they are taking over. We have a resistance by looking for sell setups. We have a trend line. And finally, the sellers proved control by breaking below what? Below the previous swing low, which happens to be the last swing, the last swing around the trend line. And I usually like to, for those who already see it a lot, I like to make my last swing, which is a trigger swing, in gray. Okay, so you always, for example, on TradingView, here we go. Okay, so you always see these ones in gray. So because these are the ones I use for entry. And yes, this is it basically. The gray are the ones that I'm looking to buy from. I'm waiting for a confirmation to buy. Okay, upload recording. Yes, of course, I'll be uploading it on YouTube. Anyway, I'm not uploading it. It's now live streaming on YouTube. So when it's done, when I click on like end, it will immediately be posted on YouTube, and it will be there always for you to watch it anytime. Okay, fantastic. Can you ask GBP JPY? Yes, since we did GBP CHF. Anyway, we'll see if we have any more requests for other pairs without GBP, then we'll go for it. If not, I don't mind. We'll do GBP CHF, but I'm trying to save time because we already did one GBP, right? So where is it? Here we go. So on GBP CHF, anyway, when we are done, like with the last one, we'll go over GBP CHF because now we've analyzed like most of it. We know our supply and resistance and so on. So the tricks for the trend lines are connect swings and not wicks. Okay, we need a swing, a full swing. The second one is don't enter on the trend line break immediately because it's not a laser line, because you can draw it in many ways. I don't know. Yes. So for example, you can draw it like this, right? Because we've got like big wicks here. So you can have like an infinite way to draw it. You've got like many ways to draw it. So it doesn't really matter how you draw it, like this or this or this, as long as it's not broken with a candle close below it. Okay, feel free to draw it just like you want, because we don't really care about the trend line itself, but the swing that's sitting around the trend line, okay, which is basically a market structure concept 101, like a classic last swing low is broken downward. So now we have a potential reversal from bullish to bearish, right? So we are overall bullish. When the last swing low is broken downward, we can know that or anticipate that we've got a potential reversal from bullish to bearish. But of course, not every swing low is broken down that will result in a reversal, right? So we have to pick the ones that are around a key rejection area and so on. Okay, let me take a sip. So these three tricks: connect big swings, don't enter on the trend line break immediately, wait for it. And we've got two types of trend lines: the big ones, which we saw in the USD on daily. You can draw it by connecting only two swings, and of course it's just an idea, right? We look for sell setups around it, just like a resistance or like a supply. We look for sell setups because price can always break it upward, just like we don't have anything, no matter if it's a supply, if it's a resistance. Okay, so and all the tools are not foolproof. Always look for rejection areas and then zoom in and wait for the sellers in this case, because it's a bearish market, for the sellers to take over before we sell. Until the sellers take over, this one would be over bullish and can still trade higher and higher. This is for trend lines. Let's go for Q&A, and then I will refill my coffee real quick because I'm now taking the last sips. Okay, fantastic. So GPGPY, Salim, if I forgot it, please let me know at the end of the session, like here on number 6. And let's scroll back to check the Q&A session, the Q&A section. Okay, so Darcy is asking in the Q&A, Rich, if there's time, can you mark up CAD JPY from clean chart? Yes, of course. Thanks, brother. Okay, Ali, I answered. Okay, fantastic. Nothing on Q&A. If you have any questions, guys, feel free to ask. I'll answer it now. Now we have this Q&A section. Even though I'm always checking the chat and trying to answer as many charts as possible, but feel free now. It's like dedicated to questions and answers. Okay, so Fahad is asking, is Forex stock and crypto show the same behavior in those conditions that you are telling? Yes and no, Fahad. Of course, every instrument, whether it's in Forex, whether like a GBP CHF and Euro USD, for example, they are both like Forex pairs, but of course you will see different behavior. no matter the instrument, no matter from which family it is, if you want if you want to call it, like forex, stocks, or crypto. But yes, as you can see from my TradingView profile, I applied the same trading style or the same analysis procedure on all these markets. But of course, you have, like, it depends on how you are going to treat it, right? So for example, in forex, I play it like I enter trades weekly with like 1% risk, 2% reward, and so on. So I enter trades, like, so I enter like a couple of trades weekly. It depends on the market, of course. But when it comes to crypto, and as my personal opinion, my personal trading style, I just buy and hold. Okay, so I don't trade on margin. I don't use leverage. I just buy it spot and hold. So I don't like need to zoom into lower time frames. Okay, so I usually like stick to the H4 time frame and above. And as you noticed already from my what is it? Here we go. As you noticed already from my charts, they are all H4 and above. Here we go. EOS, for example. No, this one is a stock. So, and here we go. ADA. So from a crypto perspective, I always stick to the H4 and above because I'm planning to hold it for long terms. For long term, for years, and not just like forex. I enter and then I close it when they could take profit and so on. How do you set up stop and take profits? Fantastic, H1. We'll check this out at the example at the end. Okay, and please show examples of reversal and confirmation candle pattern that you consider a high value trigger points. Good question. I don't really care or don't really like put the lights on candles. I just check candles I check it out from daily and weekly time frames just to see, like, get a thing about the market. It's just an add-on for me. It's not like a main confluence. Okay, so even if I have like an engulfing pattern or a shooting star, I don't really like give it like weight in my analysis. But of course, if I were to check the candles, I always check the candles on daily and weekly time frames. When it comes to that confirmation of reversal, it depends on the. Let me give you an example. For example, here on NZD USD, where is it? Here we go. Right. So NZD USD, we got a trend line, and we're waiting for the price to break below this like swing, right? So we had our swing here, and we're waiting for a candle close. And I always say we want a momentum candle close. So we don't want like a small, or what I call shy. We don't want a shy candle closing below it. So we don't want like this small candle like closing below it, right? Because it doesn't like prove that the sellers are taking over. We want to see a big massive candle just like this one, right? We want to see a big candle, and we want to see its wick, its lower wick, like very small. So if this wick, for example, was like this, right, then and of course it wouldn't be valid. We want to see a full candle with a very small wick, just like this one. It can be big, but it shouldn't be like big if you check the body, right? So always think in relation between the body and the wick. Okay, so for example, if this is a big wick from the downside, pushing price upward, even though it's not like an entry, it's not like a bearish candle, but just to give you an overview about what I mean. So this was our trigger candle in this case. So our entry was here after a momentum candle, which is a momentum, or if you want to call it a big or a full, whatever you want to call it, a big candle closing below this last swing. So this would be our entry. Okay, so fantastic. I guess I answered. Fantastic. That we have Daniel here. Yes, of course. When you are done with the session, it will be recorded and it will be uploaded to YouTube. So feel free to watch it. Set up stop P. Okay, fantastic. So now I will take like 2 minutes break because I have I have to refill my coffee, and we've got here our partner Jad. So feel free to ask Jad now any questions. Anyway, I'll just go for like 2 or 3 minutes just to make my coffee. I will make Jad a host. I don't know how. Promote to pan. I don't know. I don't know how, but I don't know if you Jad can like talk or.
Hello.
Okay, fantastic. Okay, fantastic. Okay, so if you guys have any questions for Jad, feel free to ask him whether, and Jad can answer via like voice or can even like answer you like in typing in the chat. Okay, I'm going to refill this one, which is it's empty, and I'll be back in 1 minute.
Hello. Anyone has any questions? I can answer. Let me know. I will answer them. Okay, so I'll start with the first question. Regarding support and resistance, okay, you will see that the more, the bigger the zone that price has rejected it, the more you will see its importance, the more you will see people will react to it every time it reaches that zone. But as Richard also said that the more it's tested, the more it has potential for it to be broken. But usually it's support and resistance. You will see the zone that is most tested. You will see the more reaction behind it, especially the first few times. Let me see the more questions that we have. Okay. And use how to spot support and resistance 3 times. If you're using HTL, you will wait for 3 dots to connect them. And also visually, you will see that this zone, every time the price has reached that zone, it rebounded. So 3 times that the price did that, it becomes a support and resistance. I'm sorry, Fahad, I don't know anything about depth of market. Maybe you could ask Richard when he comes back. Regarding a good stop loss size for entry, it depends on your account. So if your account is 10,000, usually your stop loss should be in pips, close to 1% of your account. So you always enter 1% of your account. And yes, if the stop loss is quite big, it's always better not to enter the trade. So you can see it visually. If it's big, it's better not to enter the trade. Regarding demand and supply zone, demand supply zone is very, I will tell Richard to show it to you when he comes back, but it's very, very visual. Supply and demand zone, it's when the price automatically jumps from an area big momentum shift upward or downward. It's very clear. Every time the price reaches that area, it goes up or down. Now Richard will show it to you again. I think Richard is back, right?
Yes, yes. Cheers, man. Cheers, man.
Okay. Someone is asking about depth of market. I don't know if you know about it. I don't. So maybe you can answer that. And someone wants to maybe a visual explanation about demand and supply. It's not still that clear. So if you can take it, I'm giving it to you all. Okay.
Yes, yes. Fantastic, fantastic.
Yeah.
Okay. Thank you so much, Jad. Okay, so now continue. I guess
Most
Jad
welcome.
answered your questions, and let me check out. Okay, Dom, I told you, Fahad, I'm not familiar with them, so I can't like tell you anything that I'm not familiar with, and it's not in my trading plan. Okay, so I will skip this question. I guess I answered this question before, right? And fantastic. Yes, exactly. Just like Jad mentioned, we enter with fixed risk per trade and not fixed lot size. Okay, anyway, we'll talk about this in our 5 golden rules. And you know what? Let's continue and go over these ones because it might answer a lot of questions that you guys asked. Okay, we'll go over this one and then I'll check the Q&A again before we go over, like last but not least, the chart analysis. We'll do a like full example on how to analyze any chart from scratch. I guess you guys like the series on YouTube. If you haven't watched it yet, you can find it on my YouTube channel. The first block, the first series, how to analyze any chart from scratch without using any indicators, just from by applying basic price action concepts and market structure 101. Okay, so this is how every video begins. And so let's do it. Let's go over our rules. So what we call the 5 golden rules. Okay, so if you don't have these 5 rules, stay away from trading. No matter if you have 4 of them and you are lacking only 1, stay away from trading if you don't have these 5 rules. The first one is, which we all heard of from brokers, from our friends, from everywhere. Only invest what you can afford to lose, whether it's in trading or not. So whether you are buying a house, you are going to make an investment, an offline investment in a business, in a restaurant, only invest what you can afford to lose. So it's not like rocket science, right? So understand that, don't invest more than you can afford to lose. So don't take loans from banks, right? Just to open a business which we don't really know if it's going to have some returns for you on the long run, right? So I'll skip this one because you already know it. Only invest what you can afford to lose, because if you don't, chances are you will get emotional, and when you get emotional, right, bad things happen. For those who already tried it, they know exactly what I mean, right? So you have to be emotionally detached from trading. Don't let your emotions drive you. If you aren't sleeping well at night, if you have an open trade, then you are doing something wrong. Okay, so stop it, close all the trades, withdraw the money, and then learn how to trade and build your own strategy that you are most comfortable with. Then and only then, and of course apply it on a demo account for like at least a couple of months, and then and only then you can create a new live account, and then you can fund your account again. Okay, so don't just like stop trading, withdraw the money from your account. So because you'll always have the tendency, like when you see a good trade, that you will open your account again and you enter the trade. Okay, so this is rule number 1. Please don't invest money you can't afford to lose. Second, you enter 1% risk per trade. It's very, very important. Of course, as a start, later on, you can put it or you can bring it up to 2%, but no more than this, because once, if you invest more than you can afford to lose, which is number 1, or if you invest like 10% risk per trade, so for example, your account is like 10K, and you are risking 1K in this particular trade, of course you'll get emotional and you'll not sleep at night, and you will watch every single movement of this trade, right? Of course. So when you risk 1% per trade, so if you have like 1K or 10K, let's say for this example, for this like slide, let's say you have a 10K account. Okay, so when you risk $100 per trade, then of course you will be emotionally detached and you will follow the rules in an objective manner. Okay, so it's very important to risk only a little, 1 to 2% max, but I recommend to start with 1%, and later on, maybe when you got make 10 or 20% of your account, you can bring it up to 2%, and then you will be risking money from your profits. And anyway, you've proved that you can, that your strategy is working. You already done 10%, so yes, then you can bring it up to 2%, but not more than 2%. Rule number 3, and you will see in a bit that all these rules are connected in a way or in a way in a way or yes, in a anyway. Okay, so they are connected all together. If you don't have these 5 rules, you are doing something wrong. So rule number 3 is you have to have a technical edge. Okay, which someone asked me about it. If the price is in the middle of nowhere, yes, we are not going to enter trades. We want to have an edge over the market from a technical perspective, which is number 3. And you always have to enter a trade when you have at least 3 things, or what we call 3 confluences, telling you that the price here should go down more than up, right? So we have a resistance, we have a trend line. I don't know about your trading style or about the tools that you follow, right? You can use moving averages. I don't really know, but I personally don't use moving averages. I just keep it to the classic patterns, like double top, like head and shoulders, like and so on. So rule number 3, only enter with 3 confluences trades if you have at least 3 reasons to enter a trade. Okay, so this will give you edge. So this way you will have like more than 50% win rate, and 50% win rate is actually amazing if you follow rule number 4. Rule number 4 is risk management edge, which is always target double our stop loss size. And this answers one of your questions. I guess Ali asked this question. We always target double our stop loss size, and anyway, we will go over the stop loss size and where to place it and so on when we take a live example about this one on how to enter with 1% risk per trade. Okay, so 1% risk per trade, our reward is what? Is 2%, obviously, right? So if you check my trading view, you always see this, right? If you click on it, you'll be able to see that the risk is 1R and the take profit is 2R. I don't think my connection is a bit slow, but maybe because I'm live streaming on YouTube, that's it, I guess. So as you can see, risk to reward ratio is 2, right? So this is the size of our stop loss, and double the size of our stop loss is our reward. Okay, so this is it. Always target double your stop loss size. This will give you an edge over the market from a risk management perspective. And then if you apply this risk management technique, then even with a 50% win rate, your account would still be going up, would still be healthy, right? Because when you win, you actually win double of when you lose. So it's not how many times you win, it's how much you win when you win and how much you lose when you lose. So some traders have like 80% win rate. So they enter 10 trades, they like win 8 trades. I don't really know what they mean by win, right? But they think that they have 80% win rate, but then they have 10 trades, they won 8, and then they came with 2 losses, which wiped out all the profit of the 8 trades, right? So it's not only about the win rate. I can go for like a very small take profit and a very big stop loss. Okay, so it's about a combination between the win rate and the risk to reward ratio. So you have to find a good combination which gives you an edge over the market. So 50% win rate. So when you enter 10 trades, 5 losses, 5 wins. If you have a risk to reward ratio which is positive as 1/2, which is as you see so here, then your account would still be going up, because 5 times 2 we have 10, while the losses are 5 times 1, which is 5. So 10 minus 5, you still got 5, even though you've entered 10 trades and you've lost 5 and you won 5. Okay, so this is it. 5 emotionally, you have to be emotionally stable. So let's now see how it's all connected. Okay, so they always say that trading psychology is very important and blah blah blah, but they never tell you how to do tricks or how to implement like certain techniques in a way that you'll be emotionally stable. Of course, I'm talking about trading, right? So basically, when you enter a 1% risk per trade, you would be emotionally detached. You won't be attached to a single trade, right? So this is trick number one. Trick number two is you're entering with three confluences, so three reasons telling you that the price should go down, right? And then of course, and you also have our trigger and confirmation, which is a fourth reason to enter. Then you will feel good. You feel good about yourself or about the trade that I did my homework and I'm entering for a reason. Right? If you enter randomly, right? If you don't know anything, or if you just like sold because the price is going up a lot, right? Of course you get emotional because you don't have a reason to enter a sell. So this is trick number one. Trick number two, and when you know that when you win more than when you lose, you also feel good about your trade. So even if you lose this one and you won the next one, right? So overall your account is going up. So these three are very important for you to be emotionally stable. And of course, if you are, if I don't know, if you have an exam, if you are still at school, if I don't know, if you have a big event going on in your life now and you aren't emotionally stable, you simply take this week off, take this month off. I don't know about you, but you don't have to trade every week. If you aren't emotionally stable and emotionally ready to apply the strategies in an objective manner, stay away from trading. You don't force it, okay? You can take weeks off, and always remember, no trade, right, is also a trade, okay? Sometimes not taking action is also an action that you decided that I don't want to take an action. Okay, so always be emotionally stable and follow all these four. For example, if you invest money you can't afford to lose, no matter if you do all of these, right, you'll always make mistakes because if you lose this money, right, if you lose this money, something bad will happen. And if you invest money you can afford to lose, and you enter with three confluences, 1 to 2 is to reward, and you are emotionally stable, but you are risking 10% per trade, of course now 2 will affect 5, right? And you will close your trade before like it reaches a take profit and so on, right? So if you remove any one of these 5, okay, you are doing something wrong. Okay, so you can afford to lose your money. You're risking 1% per trade, but you don't enter with a reason, or you don't have an edge over the market. Of course you will lose. Okay, if you do all these three, right, and you don't like target double your reward at least, then no matter how many times you win, one loss can wipe out your account. Okay, so all these 5 are connected in a sort of way. So this is it for the 5 rules. Make sure to apply it, and don't worry, you will be able to see it hopefully when the video is uploaded on YouTube. Now let's go over really quick for the chat and for the Q&A. Okay, yes, for some who are asking about, yes, I told you about this 1% risk per trade. It depends on the trade. Anyway, let's take an example now about GBP such as, since we've done it, and how we could enter this trade with 1% risk. Okay, so let's go check it out. Where is it? GBP CHF. I can't really click because I have a box here. I told you before. I can always see, which is annoying, but I'm trying my best not to see it. Okay, so this is it basically. Here we go. Okay, so now price approaching a support area, right? So we're looking for buy setups. We are looking for buy setups. We don't buy blindly. We already know that. Then we zoom into lower time frames to look for buy setups, right? We already know all of this. Okay, and now we can draw our trend lines because we've done the trend lines section, and for overall direction. If you go to weekly time frame, which is a big time frame, but it's okay, it's still good to give you an overall direction of the market. We can see that we are going in a flat range from a medium-term perspective, but from a long-term perspective we are overall bearish, and lately we are stuck inside this range, right? So this trend line here can act as a non-horizontal resistance, and I always like to make it in brown. Okay, so that in the first glance, I will know that this one is a rejection trend line from a higher time frames. I use the blue and red for my triggers, for my trigger trend lines. For rejection trend lines, I always use brown. Okay, so this is it basically. As price approaches this trend line, we can know that it's a potential resistance area. If we zoom, and of course we also have this one. If you saw it, here we go, right? And here we go. So the price is now trading inside this, and let me make this one like this. Here we go, right? By connecting these swings, this is it. So I'll leave this one to make the chart clean for now. We have these support and resistance, blue and green, from daily time frame, and now from weekly we saw that we are overall bearish, and you can make it a bit lower like this, right? It doesn't really matter how you draw it because it's a wick, right? As long as it's not broken, you can draw it as you like, okay? Because it's an entire zone as mentioned before. Okay, let's keep it as a line. So we know that GBP/CHF is overall bearish, impulse correction, right? So you just follow the market, and we are currently in this phase. So the odds are that we might have another correction to the downside, unless the momentum is shifted by a break above this trend line. In this case, when we see a break above it, then we know that this trend line is no longer holding the price down, no longer acting as an horizontal resistance, and it should be deleted, right? And since we have a resistance here, it's now turned into a support, obviously, and we'll be looking for buy on the retest. And of course, as price approaches this resistance here, we'll be looking for sell setups. But let's take it step by step, okay? So this is what we know so far. Just from weekly, we know that we are overall bearish and around the upper bound, which is our upper brown trend line, and it's appearing on lower all time frames, which is good. Now, if we zoom into daily, here we go. Here's our trend line, and we know that this zone is a very good zone because it's the intersection of what? Intersection of this brown trend line, which is from weekly, and this blue trend line, which is a resistance zone from daily that we saw just when we zoomed out, right? But now we are doing analysis from a zoomed in perspective. So let's stick to this view. Now, from a zoomed in perspective, we can also identify this current range. Anyway, we don't have to draw trend lines because it's like in the shape of a range. So I usually would like to draw zones upward and the upper and lower bound. But if you'd like, for the sake of this example, we can also draw like this. And here we go, right? So the price is now overall bearish, trading inside these two. Since we have brown up there, let's make this one an orange, so that we can know that this one is from daily time frame, right? So this is it. The price now was approaching this lower bound because price is now trading inside this channel and around this lower support area. That's why we are looking for buy setups. Price can still dive inside this one before going upward and kick early buyers out, or even break below it, and then we'll be looking for sell the retest instead. And of course, as price approaches the upper bound, which is this, and this, so this is an entire area, right? It's not a laser level. This is an entire area where we'll be looking for sell setups, and it's very strong. It's the intersection of three rejection zones and not laser levels. So this one should be treated like this, this one should be like this, and this one should be like this. But as you can see, the chart gets a lot messier. So let's keep it very clean, and let's keep it as one level for each rejection zone. Okay, so this is it basically. So now from daily time frame, and for those who asked me before, now we know that I'll be looking for buy here. Let's make it in blue. That's why you always see these arrows on my chart. And I'll be looking for sell here. Let's make it in red. Okay, so now I will save, of course. So now even if I close my platform, the next day if I open it, I will immediately know, without like doing the analysis all over again or even zoom out, I will know that I'll be looking for buy here and sell here. So now let's zoom into our time frames finally, right? And look for buy setups. If you go to H4, take a sip. So if we go to H4, we can see that we are overall bearish, right? From H4, which makes sense, right? Because if you zoom out, we can see that Here we go, bullish, bearish, bullish, bearish, right? So now we are speculating this bullish movement. And you don't want to buy a bearish market because clearly now if you zoom in, we can see that the price is making lower highs and lower lows. Maybe now we are speculating this low here, right? So what we are looking for buy stops since we are around a support area, but we don't buy yet, just yet. We look for buy stops. So now we can draw this trend line like this. And as I told you before, I like to do it in red for my trigger. For my trigger trend lines, which is H4 and below. But we start from H4. If you don't find anything or any particular pattern, then we zoom into lower time frames, right? So this is it, and then we can make an offset for it if you would like to see the overall movement. The price is now trading inside this channel. However, the upper trend line is not valid yet. Why? Because as we mentioned previously, the short-term trend lines has to be, for it to be valid, it has to be connecting 3 swings. But for now, it's only connecting what? 2 swings. So it's not valid. Anyway, we don't really care about this one. What we care about is the upper trend line, right? Because we want to buy on its break upward, not on its break on its last swing. Okay, for extra confirmation. So what we'll be waiting for? We're waiting for price to go up, maybe because it's an idea. It's not formed yet. Okay, and we already know that. So if price goes up straight from here, this idea would no longer be valid. Okay, if price now goes down, forms a new swing maybe, and then maybe like this, then we can buy on its break upward. Would be around a support area. The price would form multiple swings, at least 3 swings, right? And I made the 4th one, which I prefer because the price would now be around a support area. And of course, if price now would like, here is one more possible scenario. Price now will go flat and form a new swing here, and then we can buy on spike upward, even though we know that it wouldn't be it's valid, right? But it wouldn't be with a high probability, just like if price got activated the buy around this lower area. Okay, so this is basically it for GBP setup. And let's say, let me draw these ones again. Let's say for those who asked about the 1% and so on. So now let's say this happens, right? So we have a swing here, we have a swing here, and the price formed this low and then broke above this last swing. So now a buy could have been entered here, right? If this happens, of course. Let's say it happened. And the stop loss should be where, for those who asked also. So I'm answering a lot of questions just with this example. So the stop loss would go just below the previous swing low. Why? Because now we were overall bearish. Previously, we were overall bullish. So high, higher high, higher low, right? And then the price broke below the previous low, which was here. Now the momentum is shifted from bullish to bearish, and the price started to make lower highs and lower lows, right? So now we are waiting for price to break above the previous high to have a shift in momentum from bearish to bull. In this case, we will be entering a buy. Okay, so let's take an example of this also. So higher highs, higher lows, and so on. So now when this one is broken downward, this low here, we know that now the sellers might take over. And when this happens, right, for the sellers to keep in control, they have to keep making lower highs and lower lows. Okay, so in this case, if for example we entered a sell here, the stop loss should go where? The stop loss should go around this area above the last high. Why? Because when we are in a potential bearish trend, the price should make lower highs and not higher highs. So our stop loss placement here means that if here's our stop loss placement, right? So it means that if price decided to go up again, means that the sellers lost control and they aren't in control. They couldn't make a lower and lower high, means that your analysis is no longer valid and you should be out. Okay, so you have to place your stop loss in a way to make sense, which would invalidate your setup. So vice versa, in this case, now we are speculating that the price would start to make higher highs and higher lows. So the correct stop loss placement should be where? Below the last low, because now the price shouldn't make another low because now we are bullish. If the price now continued lower, okay, it would be a fake breakout, and then you shouldn't be holding your buy anymore. It wouldn't be valid. It wouldn't make any sense, right? So in this case, I want to be out of the market if price decided to make another low. So this is where you place your stop loss, and of course, it depends to your hand, what is your candle close here, and you target a 2-to-1 ratio as mentioned before. You simply make a projection, which is double your stop loss size. So now, how do you know how much to enter? To enter with 1% risk per trade, you simply know how many pips you've got from your entry to your stop loss. In this case, we got like 105 pips, right? You can see it here. And then you have to calculate. It depends on your account. It depends on the pair and so on. You have to calculate the pip value. And you have to know how much to enter with the appropriate lot size so that the stop loss size would be 1% of your account. So if your account is 10K, you have to risk $100 here. It depends on the pips. You have to calculate the lot size and then enter with the appropriate lot size for the stop loss to be 1%. Okay, so this is basically, I answered many questions. Let's see, there are the double bottom. Yes, exactly, Darcy. We've got a double bottom. We can see it clearly on M30 time frame. However, right, I didn't mention it because here we go. Here's our double bottom, right? However, here's our neckline, because we've got what? We've got this trend line holding the price back. So now if this one is broken upward, you can see that the price can still reject this trend line to make new swings around it. So always, it's very good that you mentioned this one, because I forgot to mention it. It's always good to see if there is anything holding the price back. This way, you also have an edge over the market, that you are not entering around a resistance, a potential resistance, even though it's not like a strong one, it's not from daily, but it can still hold the price back. In this case, I'll personally skip this trade, and as you clearly see, the buy is activating where? Activating midway, which I don't like. I want the buy to look for buy around the lower bound or sell around the upper bound. So for these reasons, it wouldn't be the best place or the best scenario to look for buy stops here. That's why I don't have it even on my chart. I'm not interested, even though it's a valid one, a valid double bottom from a shape perspective, but it's not like a good area to look for buy setups. Take profits. Okay, fantastic, Johnny. I guess I answered your question about take profits, and GP, I answered your question, Darcy. Fantastic. I guess I answered all these questions. Amazing. Let's check the chat. Okay, I answered your good question, Fahad. Amazing. So yes, I'll take a sip. Let me know if you guys have any questions, so I can before we take one more example, maybe if you would like. Let me fix the camera. Okay. Okay, so do you see any difference in terms of technical analysis when trading crypto compared to stocks or forex? Yes, sir, and yes, to answer Daniel's questions and Sid question. Daniel asked, how do you use Binance to trade, right? I don't trade crypto, as mentioned previously. I recommend that you just buy and hold. Okay, I buy it on spot. Don't buy it on spot. Don't trade it on margin. Okay, don't trade it on margin. So I personally don't trade it. If you would like to trade it like futures and like leverage, there are many videos. I wouldn't be making any video about this one. Okay, because I don't personally do it. I only share what I do. I don't care about like adding quantity videos to my channel. I just add what I'm good at. So some traders ask me about moving averages. I don't personally use moving averages, so I wouldn't be making a video about moving averages. Okay, because I'm not in a position that allows me to talk about it, or to give you my opinion, or like recommendations if I don't personally use it, right? How can one spot supply and demand? We already done. We already done that. Hopefully you will check it out and the recording. We already went over supply and demand. I'm trying to get like new questions so that I keep the session as clean as possible. Okay, so that you will not repeat the same one again. Okay, so now we've got. Okay, so I answered Daniel regarding Binance, and said regarding technical analysis when trading crypto. As mentioned previously, Zoom, I prefer to like only look for it on H4 and above, but because I buy and hold, so I always look for H4, or even sometimes on daily time frame, because I'm planning to hold it for years. Do you use investing for X Factor? No, I don't. Okay, I have just investing. Do you mean for chart analysis on investing, or do you mean for like news, right? If it's for news, Anga, I have the app on my phone. I just check. I just check. This is your answer about profit. Okay, okay, let me finish answering Anga first. So yes, I have investing. I only keep an eye on the high impact news like NFP, NOFC, and FOMC. So I just keep an eye on the high impact news, the high impact news, not just like, because it's like three like stars. Okay, and I don't trade the news. I just like if I'm holding like a trade, for example, on USD, on CAD, and you have NFP, for example, and then I manage my trade accordingly in a way that I think in terms of risk to reward ratio, and I decide if I close it, I move my stop loss in an aggressive manner to break even, and so on. Okay, so because I don't want like a big candle to out stop loss. So for example, if the trade is around take profit, I would close the trade, because I'd be risking like a lot. Price can go down and kick me out on break even, or the reward would be very small because it's already around take profit. So if the news was in my favor, then it will just go a little bit more. So this reward is bad here. So in this case, I will close it if it's around take profit, and so on, right? And okay, so Johnny asked, I'm doing great, Johnny. Hope you too. I didn't receive your answer about take profit. I wasn't here. I was late logging. It's okay, man. Wish to know how exactly traders know that take profit 1, 2, 3, 4 due to last low. Yes, Johnny, please stay away from these traders, or whoever they are. 1, 2, 3, 4 take profit. It's a big mistake. Okay, so cheers. Okay, I'll explain why. Okay, I'll explain why. Let me how to open a blank one. Oops, I'll delete this one and delete this one. Fantastic. Okay, so here we've got 2 TP, right? 2 TP, and here we've got 1 TP. Okay, so and we are going to compare them in terms of risk to reward. Okay, so first of all, they will tell you like you have to buy here, and this is your stop loss, and this is your TP1, I guess, right? This is how they do it, and this is your TP2. And for those who use TP3 and TP3, TP4, bye. Okay. Anyway, you've got my idea. So let's keep it only for 2 TPs, and you will know like and do a projection for like 4 TPs. So so here's your stop loss size, which is like you know what? I'll be talking about. I'm trying to keep it as simple as possible. So let's say it's like 50 pips, right? And you've entered like with 0.1 lot size. Okay, this way it would be easier for you to check the two. And I enter my trade here. For example, it's the same trade, 50 pips, and I target like double my stop loss size, which is 100 pips, right? So when my trade goes up here and hits the 100 pips, right? I'm risking 1% and I gained 2%, right? So I entered 0.1, let's say it's 1% of my account and so on. So I gained 2%. While here, right, usually these traders, I don't like to talk about pips. I only just check it to calculate how much lots should I enter. Okay, but usually those who talk about pips, right, a lot. So for example, this month we've made like 5,000 pips, right? So these are the traders who like use many take profits. So what they do actually is they will tell you like buy here, and then after like 30 pips, like or I don't know, 10 pips, some traders do it. So 30 pips, and you know what? Let's keep it as simple as possible. Let's say 25 pips. Okay, so they will tell you close half, right? So now you've closed 0.05, and the remaining 75 pips, right? It's running with what? With 0.05, right? And then they will say, we've got 100 pips, right? So they've got like 25 here and 75 here. And some will say 125 pips. So they got 100 from here to here and 25 from here to here, okay? But actually, okay, so they have to multiply the 25 pips by 0.1 because we've got the first TP and second TP. So this is the common area between the two. So this is the only one that you have to multiply by 0.1, while the remaining 75 pips, which is the biggest part, you have to multiply it by 0.05. Okay, so actually this one is it's like 37 pips, 37.5, right? So they actually made, if you want to keep it like the same lot size, 25 and 35. So this is your total. Okay, so this is why you see that they are making a lot of pips, but in fact your account is like still the same or in loss. So in fact here they made like what, 100 pips, but they have like the account is what, 25, 25, 50, and we've got like 60. Where should I write it? 67 pips, right? And then, right, if you make like two stop loss, for example, you enter a trade now, okay, you enter a trade TP1, TP2, but then you had your stop loss here, which is 50 pips, and the price now, you didn't have the opportunity to close half because price didn't reach your TP1, instead went straight to stop loss. You've got 50 pips stop loss with a full 0.1 lot. So 50 pips times 0.1, right? Lot size depends on the pair. I'm keeping it 0.1 because the value is different for each pair, okay? Which they also don't take into consideration. Okay, so you've got a trade 50 pips, and you this is your actual win from the last trade. So you ended up with 17 pips, while they say that they made 100 pips minus 50, so they made 50. And if they make like one take profit, which is here TP2, and two stop loss, right? From their perspective, they are sitting around zero because they have 100 TP and 50 for the stop loss. So they have 0 pips. So they say that we've made 0 pips, right? While you have to make 17 minus 50 pips. So you are actually in loss. Okay. So long story short, stay away from pips and whoever counts it. Okay. That's it for it was a long answer, but Okay, didn't answer. Okay. Fantastic. Okay, fantastic, Johnny. Up recording. Yeah, yes, sure. Of course, Jonathan. It's yes, of course, Jonathan. It will be recorded and posted on YouTube just after I finish the session. Okay, to identify my take profit, Johnny, it's as simple as we mentioned just now. It's let me throw it like this. Here we go. Right. So I don't know why the drawings are like off. For example, we've got this movement like this and price break it upwards. So now our trend line is valid. This is our entry. The stop loss is just below the previous swing low, right? As mentioned before, if you weren't there when I mentioned the logic of what I'm comparing the slow and so on, then it's okay. You will watch the recording. Regarding take profit, I just do projection of 2R. Okay, so the stop loss size, the take profit is double the stop loss size. But of course, I always take into consideration if we have any rejection. Here, for example, here the rejection or resistance zones are these ones from the daily time frame. So the buy can reach our take profit before reaching our resistance zone. Okay, so of course take this into consideration. Okay, so this is it basically. Okay, fantastic. Let's do one more example, but since we don't have much time, because it's already 2 hours, right? It's already 2 hours. Yes, it's already 2 hours. So let's go for my charts, right? My charts are where? Let's click this one. I guess my charts are here. Yes, this is it. Okay, so my charts are here. Let's go for the XY because the XY will sum up everything. Okay, so you always follow the XY in your analysis because it will give you an overall feeling about the markets. Okay, so if for example, if the XY or which is the USD index, if it's going down, then you can speculate that your USD, GBP USD are going up, right? Or if it's going down, means USDCHF, USDJPY, and so on are going down, and the DXY affects all the currencies, not only the USD pairs. Okay. Anyway, you can do your own research, but I always start. I always start my analysis with the XY to get a feeling about the market. Okay, since you already have it, I can't honestly like check the charts without HTL. This is how I'm used to do it. Okay, so this is it basically. The XY is approaching a very strong resistance area. We can clearly see it. We've got, sorry about that, not this button, 1, 2, 3, and 4. So it's a strong resistance area, and it was around a support. It was around a support area previously, as you can see, 1, 2, 3, 4. Right. So we were looking, or we were speculating a bullish movement on the XY, and I guess I posted analysis for this one. We were overall bullish, higher highs and higher lows. Correction is about to end around here, around the support. So we're looking for buy setups or speculating a bullish movement on the XY. And now price is approaching this resistance area. So long story short, just from daily time frame, we know that the price is now sitting around a resistance area. So we'll be looking forward for sell setups, unless of course it's broken upward with 2 big bullish candles or a massive bullish candle. Then we'll be looking for buy setups on the retest. But for now, as per the current market conditions, we are around a resistance. Thus, we're looking for sell setups. Now, if we zoom into H4 time frame, we can see that the price, we can draw these what I call outer trend lines engulfing the overall movement, giving us an overall feeling or overall direction overall the direction about the market. And yes, okay, so we are currently around this upper trend line, which I consider an Let me check my camera real quick. Yes, it's doing good. Oops. Okay, this is it. Okay, which is around the upper bound, which I consider an overbought area. Okay, so impulse correction, impulse correction. We are currently at the end of the impulse. We can't really know for now, but we know that we are around this upper trend line, which is acting as a horizontal resistance, and around resistance and orange from the time frame, right? So that's why we are looking for sell setups on lower time frames. We are looking, price can still break it upward. Now we zoom into lower time frames to look for these setups. On H1 time frame, we have this trend line forming. That's why you see a trend line forming on almost all pairs. And you see almost all pairs sitting around a rejection area. It can be a resistance, right? For like, for example, USD CHF is around resistance. USD JPY is around resistance, right? While Euro USD is around support, right? And again, not only the USD pairs, okay? Almost all the currencies, all the pairs are sitting around a key rejection area, whether it's a support or resistance. So we have these two rejection areas. We are looking for sell setups, and this trend line is not valid yet. So we're waiting for price to form a new swing around it, and then we can sell on break downward, or we can confirm that now the sellers are taking over. Price is overall bullish, and a simple break of last high or last low isn't enough. Even though we are around a resistance, we need extra confirmation, we need a pattern, we need a reason. Okay, so this is basically it. Now you've got an idea about the whole Forex market. I recommend that you always start your analysis with the XY, because now, no matter which chart you have, for example, GBP is exactly the opposite. We have a channel, a bearish channel around the support, looking for buy setups. Now, if you go and check really quick Euro USD, you will see the exact opposite scenario. Where is it? Here we go, right? So you'll see the exact opposite scenario, while around a support area, around the lower trend line, looking for buy setups, right? And if you zoom into H1, you will see the exact opposite scenario, which is a falling trend line, and we'll be waiting for price to form a new swing around it for the buyers to take over. And I'll not go over all the pairs, of course, but this is why I went for the DXY, so that it will sum up all the pairs. And anyway, the session is not about like giving you signals. This is not my vision, and we will never be. I never post direct signals to follow blindly on my channels. We are a coaching community. We are not a signal provider, and I will never be. Okay, so for those who are interested in signals to follow blindly, anyway, I don't think you guys are interested in these, because if so, you wouldn't be here in this session to trying to learn a thing or two. Okay, hope you like this session, guys. I'll still have some energy, because as you all know, English isn't my first language, so I get tired, and but I still have some energy. Hope my English was clear and everything was good. If you guys have any questions, I still have like 5 minutes, hopefully some energy I can answer. You are more than welcome, Shia. You're more welcome, Fahad. I'm happy. You Fahad asked so many questions today. So if you combine all the people who ask questions, you ask more than all the people, which I don't mind at all. I love questions. But I can still remember your name. Whenever I see questions, I can see Fahad asking a question among these questions. so cheers, man. You are more than welcome, Shia. I'm glad that you liked it. It's good for anti 130 or better on H1. Johnny, it doesn't really matter as long as the setup is valid. But usually start from H4 right? For example, on GBP CHF, we didn't zoom in because we found an entry or found a pattern forming at least on H4. If you didn't find anything on H4, then we zoom into H1. If you don't find anything on H1, then and only then zoom into M30. So the higher time frame, the better. But if you don't find anything, but the price is approaching a strong rejection area, right? Yes, exactly. Around support we are looking for why, but I personally only or the minimum time frame that I zoom in is the M30. I don't zoom into M15. So if I don't find a setup on M30, I don't zoom into lower than this. Okay, so MC, thank you for this. Nice to see the mentality of the trade psychology, removal of emotions, the confluences. Exactly, MC. No matter which is what your trading plan is, as long as you are applying these 5 rules, you will be fine. Okay, so again and again, don't quit trading, stay away from it. Just do it as a hobby or fun, like learn and of course enjoy the process. If you guys need anything meanwhile in your trading journey, it would be an honor to support you, whether you are in our community as a student or not. It doesn't really matter. I do it because I love what I'm doing. So if you would like guys to ask me any questions on my Instagram profile or on Telegram in private, I don't mind it. But as long as you don't ask for signals, you don't, right? So you got what I mean, or pips or anything like that. Okay, so as long as you are following these 5 rules, you will be fine. And of course, backtesting is very important. I'll hopefully make a session about backtesting and post it on the free channel, hopefully soon. But backtesting is very important. Anyway, you can find many videos, or you don't need videos anyway. So scroll back in history, see if this strategy or rules that they are providing good results. And anyway, while you are backtesting, it's very important because you start to notice specific patterns that works best, specific patterns that give the worst results, and you will try to find ways to optimize it or tweak it in a way to become better. Okay, so it's very important to backtest and forward test it for like a couple of months on a demo account again and again, no matter which strategy you are following, no matter if it's supply and demand, no matter if it's moving averages, Fibonacci tracements, and so on. I don't really care as long as you are following the 5 rules. Okay, Ishwan, thank you so much, Rich. Amazing session. You are more than welcome, man. I'm happy that you made it till the end, even though like 2 hours, 10 minutes, it requires a lot of dedication from you guys. So I really respect your time and thank you so much, James. And of course, I want to thank you guys. Anyway, this session is all about because we reached 5K on YouTube. So I want to thank you for your support. And this session was as a thank you for your support. And I like to do this session just to meet you guys. And we've got like many names that I didn't see before. So which is amazing. JR Fuller, cheers, man. I guess JR, you joined our community like 2 days ago, right? So I can still remember your name and your cheers. So in your email you sent me at the end, cheers. So cheers. Okay. You are more welcome, Andre. You made me laugh, man. Okay, guys, so this is it. I'm happy that you enjoyed this session. Amazing, amazing, JR. If you would like, if you have any questions, I'm always here. You have my contact. I have my email. I'm here whenever you need. Okay, fantastic. So this is it, I guess. I don't see questions. So let's call a session 2 hours and 10 minutes, especially for those who are watching the recording. It would be like a big fat one, so which is good. And someone like mentioned that hopefully we will do like this session like every month. Yes, We will see. We will see. Okay. So yes. Okay. Bye bye, guys, and I see you on the next one, hopefully. Bye bye.